Being a Sharia investor, you may think and be worried that the universe of Sharia investing is small and there aren't many options in India to invest in. You might compare yourself with your fellow non Sharia investor and look in awe at the number of avenues they invest in. In this video, let us find out how to create a customized Sharia portfolio apart from the regulated investments just by satisfying all the rules. Welcome to holisticinvestment.in. In this video, let us look into the principles of Sharia investing, dissecting the elements of Sharia investing. Then we shall find out how to create a Sharia portfolio that cater your needs. First, let us visit the three core principles of Sharia investing as they are the foundation on which the entire financial plan is to be drafted. Prohibition of interest. Interest in any form is prohibited in Sharia. We aren't supposed to give or get any interest and it is considered unlawful to do so. Prohibition to invest in certain businesses. Sharia prohibits you from investing in business from the alcohol industry, gambling and products from pork. And receiving any interest from these companies is also prohibited. Wealth distribution. As per Sharia investing principles, you are required to share a certain percent of your profit. This is said to alleviate poverty as the rich-poor divide is reduced under profit sharing. Next, we shall try to dissect the elements of Sharia investing. Small universe. The world of Sharia investing is smaller when compared to the conventional investment style. Due to this, the fund manager miss out on diversification in this type of fund. This lack of diversification may also mean that they may overinvest in a sector and may miss out on certain sector. This will cause an imbalance. Compliant risk. There is also a compliance risk that stocks invested by Sharia compliant funds may turn non-compliant. In such case, the fund manager has to exclude these stocks from his portfolio, again causing an imbalance. Less regulation. Some countries like ours do not have a regulated form of Sharia investing framework or an Islamic bank for that matter. In 2006, Raghuram Rajan, the erstwhile RBI governor, had plans to incorporate Islamic banking, but the plan never took off. Scams in the name of Sharia or halal funds. People have been lured on into investing in Ponzi scheme in the name of Sharia compliant funds. Sachar Committee, which was formed in 2005 to study the socio-economic conditions of Muslim in India, observed that Muslim investors are often enticed in the name of religion to invest in such Ponzi schemes. An example of such a scam was the Amident scam in Bengaluru, where the promoters promised a return of 12% every month. This turns out to be 144% approximately return over 1 year. Crazy stuff, isn't it? After weighing the pros and cons of Sharia investing, it may give a superficial appearance that we do not have much option to invest. But as mentioned in the beginning, we can curate a portfolio taking only the essence of Sharia and formulate an end-to-end plan for all goals. Wondering how? Let's see how we can create one such plan. Emergency fund. FD is the most convenient and easiest way to have your emergency fund. But for Sharia investing, this doesn't hold well as it is an interest yielding instrument. The next option is liquid funds. Though the returns from liquid funds are not in the form of interest, but it includes the interest of the underlying debt and fixed income securities. If you are okay with this, you can go with liquid funds. If you are still looking for a Sharia certified investment, you can opt for the Sharia savings account, which are offered by some of the Islamic banks in India. The Taqwa Credit Cooperation Society is one of the very few banks in India. You can make a savings account with them for your emergency fund. Short-term investing for Sharia investment. Sharia investment portfolio is the trickiest part. In the conventional world, the short-term requirements are taken care of by the debt components. But being Sharia compliant, these are forbidden. The major criteria are to make our capital appreciate at a decent pace and it should be highly liquid as and when required. Of all the other instruments available under Sharia, only gold can satisfy these criteria to some extent. Please note that this is speculative. Gold may produce lesser or even negative returns in the period less than 3 years. So, for a 3 to 5 year time frame, you can consider gold to be a safer haven and be Sharia compliant. Long term Sharia investing is comparatively easier than short term ones by virtue of the funds available. There are three regulated funds: Tata Ethical Fund, Taurus Ethical Fund, Nippon India ETF Sharia Bees is the only non Sharia compliant ETF available in India. But do you think these three funds are sufficient enough to give you the required diversification and overall wealth creation? Let's make it simple. Consider the top stocks that are traded in India and are part of the Nifty 50 index. Filter these stocks with Islamic investing law. All banking sector and some FMCG stocks like ITC do not pass through the filter. You will be left with a few sectors like technology, pharma, metal, automobile. You can simply invest in these thematic funds and be a Sharia compliant. Infrastructure Investment Trust and Real Estate Investment Trust. There are some Sharia certified InvITs and REITs which you can consider. If alcohol or pork is not served in the premises of a REIT, and if the REIT does not house any interest bearing asset, then the REIT can be considered to be Sharia compliant. The same is applicable for InvITs as well. Do note that the liquidity is lesser in the case of REITs and InvITs as they can only be sold in the secondary market. Bottom line, just like all investing styles, Sharia investing has its share of pros and cons. If you are planning to invest only in the 100% certified Sharia compliant funds, then the options are fewer. However, if we understand the basis of Sharia investing principles and tweak a personalized investment portfolio, then there are many more avenues open up for investing. As an informed investor, we should weigh all the options with us and should take the right decision. Happy investing. A detailed blog post on this topic is available in our website, and the link for the same is given in the description box. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.